Good morning and happy Thursday. I'm guessing the most frequent questions on most people's minds today was yesterday the beginning of the end of the world? And I think the answer to that is no, for a few reasons. So I just want to spend a few minutes giving you some perspective in terms of what has taken place, specifically in equity markets, over the last couple of days, with some what we call episodic and non-trending volatility spikes. We still have some time on our hands to identify whether or not that episode turns into something different, but I'll give you the circumstances, the setups, and what we anticipate to be happening from this point forward. So if we think about what's taken place in hedge fund space in the last 3 days, we've seen some amazing blow-ups take place because there were a number of hedge funds that were heavy net short. And when I say heavy net short, I mean to the extent of 200 or 300% short one or more names that have gone up a lot. For example, GameStop. I'm sure you've heard that on TV if you've tuned into any of the old wall kinds of shows, which I don't recommend, by the way. AMC Theaters. There's just a whole host of names that have been viewed for the longest time as garbage, going out of business. And then these companies, these hedge funds, got themselves in a short squeeze. What's that mean? Well, to short a position in the major equity markets, you have to have a margin account. And so when you short something, it goes into your margin ledger. The custodian has very strict guidelines and regulations that they have to follow in terms of what happens to that position if it starts to drop, and they in many cases can call or have a margin call and force you to cover that position, or you have to sell something to help cover the debit that's going on inside your margin account. And so major hedge funds got themselves in a position with GameStop where it went parabolic. And I'll give you an example. Let me show you a picture of it real quickly here. So let me pick up GameStop, which is right here. You can see that the stock had been meandering along down here for a long time, not doing a whole lot after having dropped considerably from way back here. And as you can see, the stock had been falling for quite a while. So a lot of big name hedge funds were piling on the short thesis, meaning they make money as the stock drops and drops and drops. And then too many hedge funds get net short at the same time, and when everyone's in the same thing at the same time in the same direction, it very, very often goes the opposite way, and then all of a sudden we start to see these spikes. So the stock, from the beginning of this year, where it was at $17 a share, went up as high today so far as $483 a share. So last time I checked, that's a pretty impressive percentage gain in one company. Of course, highly risky, but the bottom line is that the custodians were coming in and saying to these hedge funds, hey, you got to cover. So instead of them covering their major thesis on a short, what do? They sell everything else. And so on Monday, we had what we call an episodic and non-trending bout of volatility. And then yesterday on Wednesday, we really had a bout of episodic and non-trending volatility. And so let me give you a picture of what that looks like just in terms of the VIX, which again is the S&P 500's volatility indicator. Here's Monday. And basically you can see it spiked up to a high of almost 27. And one of the things I had talked about recently was that the VIX, or volatility indicator for the S&P, is in what we call the chop bucket. So moving itself from basically 20 to about 27 is an environment where you have to trade the chop. So you buy at 27, you sell at 20. So the week prior, leading into Thursday and Friday, I had sold a considerable amount of our risk-based assets because volatility got down to about 21. And I said, there's a good chance that this can move up. Well, then on Monday, we got this episodic non-trending bout of volatility to 27, and I bought in pretty heavily. Had some cash left yesterday, so I bought in more, but I bought in too much on Monday. And the reason was a number of reasons. Number one, we're in quad two. So it's growth with accelerating inflation, and you certainly don't want to not be invested too long inside of a quad two cycle. That's for sure. Number two, it didn't appear that the US dollar wanted to break out and go higher. We were getting mathematical signals of lower highs, suggesting that it's one, still in bearish trend and that the dollar would probably fall, and that typically is good for equity assets. Two, high yield was not giving us any indication of a major blowout. In other words, high yields were not telling us something frightening was happening beyond the fact that a lot of chart chasers in equity land were getting squeezed, like in GameStop, AMC Theaters, and a whole host of other individual companies. Global interest rates were not crashing. Typically, if the world's coming to an end in equity space, you're going to see global yields, especially yields on the 10-year Treasury, collapse, and that didn't happen. And so the same thing's true for yesterday's bout of volatility. Now the question is it over? And my answer is I don't know. Typically speaking, when we get a bout of volatility that shoots the VIX up past trend is at 27. So if we see it shoot up past 27, what I need to see is, can it get itself back down below 27, or in most cases 31 even. 31 is kind of that level, what we would call the not so happy bucket. It's a space where bad things can happen to equities pretty quick, but that doesn't typically last that long in quad 2. So what we want to see is, can it get below 31? Can it stay there with inside the basically a 3-day stretch? And then on top of that, do we see things happening in currencies and rates that would give us reason for concern? So let me show you my screens one more time. Here's VIX. This was yesterday's, what we believed was an episodic and non-trending bout of volatility that should be used to buy into, the same way that this bout of volatility was used to buy into. And then today, this is VIX. It's down about 20% to below 31, so that's good. The next thing is a representation of the US dollar. Dollar is down today, roughly 0.25%. That's good. And then the last thing is interest rates on the 10-year Treasury. You can see that interest rates are up about 3% to 1.04% on the 10-year Treasury. And that's good. And it's good because it's not collapsing. So if we really felt that things were super problematic, or leading us into something similar to what we saw in January, February of 2020, we would see the dollar going up fairly substantially. We would see interest rates on the 10-year Treasury collapsing, like below 1% kind of collapsing. We would see high yield rates really moving up. And we're not seeing any of those things. We'd also see global yields, like on the German Bund, the Japanese bond, a whole host of other global yields. We'd see all these things really starting to collapse. And that's not happening. So with that being the case, we have to view yesterday as nothing more than one of these episodes there where it shakes out the weak hands, and a whole number of hedge funds were getting taken out back behind the woodshed and literally shot. Carried out on stretchers, they're gone, they're not around anymore. Now, one of the narratives that you're going to hear, and those of you who have been listening to me for some time know that we don't do narratives. If the conversation doesn't start and end with some number or a mathematical process, it's a narrative. And a narrative will lead people in absolutely the wrong direction all the time. And one of the biggest narratives that you're hearing on mainstream TV with regards to CNBC or any of the financial shows is that this short squeeze that you're seeing happening in a whole host of companies that were otherwise, about a month ago, considered left for dead, GameStop, AMC Theaters, Build-A-Bear Workshops, you name it. There's a whole host of companies. They're all getting short squeezed. And so the narrative on TV is, well, this is hugely bearish. My goodness, we're going to go back into a terrible scenario. This is systemically problematic. I understand that argument, but that is absolutely the opposite of what reality is. Think about it for just a minute. If that many hedge funds are that bearish on that much within U.S. equity space, isn't consensus usually the opposite of, we need to do the opposite of what a consensus is doing? Yeah, we do. We need to do the opposite of consensus. If everyone is super bearish, well, that's good. Markets need a wall of worry to continue to climb. It's problematic when everybody's super bullish. Well, that's not the case. So short squeezes are the opposite of super bearish. They're actually super bullish because it's proving that there are piles and piles and piles of bearishness in the market, and that's actually a good thing in quad 2. So number one, the dollar's not going up. Number two, yields aren't crashing. Number three, high yields are not blowing out. FX currency volatility, foreign currencies, the US dollar, all that is relatively sanguine in terms of the way it's moving. And yes, volatility got super spicy yesterday. There's no doubt about it. But spiciness typically abates as long as you're in the right space. We're not headed to quad 4 yet. Quad 4 is deflation. Quad 2 is inflation with growth with accelerating inflation. And as of right now, all those things still hold true. So we're very heavily invested right now, took advantage of these volatility spikes both Monday and yesterday. We'll use any gains that we get in terms of spikes back toward the top end of the range. And right now, the expected top end in the S&P 500 is 38.95. As we speak right now, the S&P 500 is at 38.07, up about 1.5%. We would anticipate that the top end of the mathematical range, 38.95, at some point gets tapped. Could it be today? Maybe. Stranger things have happened. Now, that'd be a 4% move. And for some, they would say, oh, there's no way the market can go up 4% in a day. In quad 2, it can. And if that happens, then I'll be doing the same thing that we were doing last week, and we'll be selling some of our holdings into that, just risk managing around the edges as best as we're able. So again, yesterday we believe to be an episode of volatility that will fade. We won't know for sure for a few days. We need to see VIX drop and stay below 31. If it can do that today, that's a great start. The low end of the mathematical expectation for VIX is now 18. That's super important because up until yesterday, the low end of the VIX was down at 20. The fact that you're seeing VIX mathematical probabilities now hit 18 suggests that that's where the market wants it to go. And some people forget, back in late 2016, when Janet Yellen was at the helm of the Fed, who now again is at the helm of the Treasury, was the only Fed governor ever to get VIX into single digits. She got it down to 9. If VIX goes to 9, price explosion will be absolutely interesting, and no one will be anticipating or expecting it, and lots of hedge funds will be dead because they're net short a lot of positions that they shouldn't be at the wrong time. So the takeaway again is that the US dollar doesn't care about any equity volatility that we got yesterday. Interest rates didn't care about anything that went on in equity space yesterday. If we consider VIX, we have to view it from an episode of volatility that fades. We got to see it get below 31 and stay there. High yield interest rates didn't care. Global FX, again, foreign currencies didn't seem to care. So all those fractal elements of current market positioning are super important in terms of trying to help us understand, should we stay net long or should we start moving away from those risk-based assets? So the opposite of what Wall Street might be telling you, yesterday was very risk on, meaning you need to take advantage of those bouts of volatility. And when VIX moves itself back down into the 20, 19, 18 range, we absolutely want to be selling some of our holdings into that to profit. So right now I'm looking for tech to give us an opportunity to pile back into more heavily and just take advantage of what we view as kind of the major horsemen of the quad 2 environment, which typically is tech, energy, industrials, and financials. We have positions in all of those in varying degrees. And on top of that, transports, materials, metals, and mining, all those are super valuable. So anyway, that's the setup. That's where we're at. Certainly not an environment to be super careful or worried about, I should say. I'm always concerned. There's never an instance where I don't have concern, but we have to follow it up with, as best as we're able, all the other elements to help us understand, are we in the right spot? And there's no doubt yesterday VIX going to 37 was a bit of a surprise. There's nothing that would have suggested that we would have seen that, but we did. So you deal with it, right? It's not the game you had, it's the game you have, and it's not the game you're currently in, but the direction the puck should be headed. And that's where we want to hit it. So at any rate, if you have any questions, I sometimes do better with questions than what I do with getting on this video and rambling for 15, 20 minutes. So hopefully today has made some sense. Hopefully today has helped you to understand why we saw the bout of volatility that we did yesterday, and more importantly, what we did about it, and then, of course, what we're anticipating to do here moving forward as we risk manage the edges. So with that, if you do have questions, give me a call, 608-354-1977, or email chris@careformywealth.com. I'm always thankful to hear from you, always appreciative to help answer anything that might be on your mind, and hopefully quell any fears that might be out there as best as I'm able. It's a tough game. There's no doubt about it if you want to play it at the highest level possible, and that's my attempt to do for you. Thank you so much for letting me work for you. Hope you have an amazing day. God bless.